Hey everyone, and welcome back to Investing Guide. Today, we're going to talk about three things: Coinbase and rumors of it filing for bankruptcy anytime soon. If you've invested in the company or are using its platform to invest in digital currency such as Bitcoin, then Coinbase has some important news for you. And we're sorry that it's not good news. Make sure you stay until the end, as you don't want to miss out on our analysis on whether in fact it might be a good opportunity to buy Coinbase. Before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications so you wouldn't miss out on new updates in the world of investing. Coinbase's stock is down nearly 74% this year alone. If you follow the large US-based cryptocurrency exchange, Coinbase, or Coin, is at minus 1.88%. You probably know that the stock has been getting crushed this year. Since going public a little more than a year ago, shares of Coinbase are down more than 80%. The significant decline has made the stock look cheap, now trading at less than 7 times earnings. Hidden away in Coinbase Global's disappointing first-year quarter earnings report, in which the US largest cryptocurrency exchange reported a quarterly loss of $430 million and a 19% drop in monthly users, is an update on the risks of using Coinbase's service that may come as a surprise to its millions of users. In the event the crypto exchange goes bankrupt, Coinbase says its users might lose all the cryptocurrency stored in their accounts too. Coinbase said in its earnings report Tuesday that it holds $256 billion in both fiat currencies and cryptocurrencies on behalf of its customers. Yet the exchange noted that in the event it ever declares bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings. Coinbase users would welcome general unsecured creditors, meaning they have no right to claim any specific property from the exchange and proceedings. Their funds would become inaccessible. That shouldn't happen. An individual's ownership of cryptocurrency is supposed to be immutable and absolute. That's one of the key selling points touted by blockchain evangelists everywhere. But when a user creates a Coinbase account, they often end up storing their cryptocurrency in a wallet controlled by Coinbase, which means the individual is giving away at least part of their control over their own funds. Access to a crypto wallet is governed by a private key, which is a long string of characters that effectively acts as a password. Without the key, the cryptocurrency in the wallet can't be accessed. On Coinbase, the exchange holds the private key and lets users access the funds within the wallet using a more conventional password. The setup makes it easier for users to enter their accounts by remembering an easier password. Yet it means that when push comes to shove, Coinbase ultimately governs whether a user gets access to those assets. In comments shared on Twitter, Coinbase CEO and founder Brian Armstrong said the exchange had no risk of bankruptcy and that the disclosure was made due to new rules set by the US Securities and Exchange Commission regarding public companies that hold crypto assets on behalf of others. This disclosure makes sense in that these legal protections have not been tested in court for crypto assets specifically, and it is possible, however unlikely, that a court would decide to consider customer assets as part of the company in bankruptcy proceedings, even if it harmed consumers. Armstrong tweeted while reassuring users that your funds are safe at Coinbase. Coinbase does offer a self-custody wallet titled Coinbase Wallet, in which users know their private key, and a Coinbase wallet or any crypto wallet is not required to trade crypto on Coinbase. But by admitting that crypto assets aren't secure in the event of a bankruptcy, Coinbase is also highlighting a major difference between storing your funds with blockchain exchanges versus keeping cash with traditional banks. Bank accounts in the US are protected by deposit insurance offered by the Federal Deposit Insurance Corporation. In the event a bank fails, the FDIC steps in to protect deposits up to $250,000, preventing depositors from going broke along with the bank. Crypto exchanges don't offer the same protection, which is the primary reason why crypto enthusiasts advise investors to hold their cryptocurrency in a personal wallet, rather than on an exchange. Coinbase shares fell 15.6% in after-hours trading after the exchange released its earnings, dragging the crypto exchange's stock price down to 80% below its Nasdaq debut in April 2021. Besides reporting a declining user base and lower than expected revenue, trading volume on the Coinbase exchange declined from $547 billion to $309 billion in the first quarter. Over the same period last year, Coinbase warned that trading volume was likely to decline further in the current quarter. With all this chaos surrounding Coinbase, it begs the question, Is it time to buy shares of Coinbase? But before we answer that question, if you liked the video so far, make sure to subscribe to the channel and comment below what you think is going to happen with Coinbase. Clearly, being so heavily connected to the crypto market and crypto trading volume makes Coinbase a bit of a hostage to the price of Bitcoin. It's great when crypto is roaring and not so great during crypto winters. Supporters of Coinbase would like to have less of a correlation to this kind of volatility because the market rarely rewards companies with volatile earnings that are difficult to predict. Coinbase has started to diversify revenue by growing subscription and services revenue, which at $152 million in Q1 was the company's second highest quarter in this segment, and up significantly on a year-over-year basis. Coinbase has also recently rolled out a marketplace for non-fungible tokens, and Armstrong said 54% of active users are doing something on the Coinbase platform other than just trading crypto. There is likely more volatility ahead of Bitcoin, and therefore more volatility for Coinbase. So investors should be prepared to see Bitcoin go much lower. But Coinbase has built a strong brand, now has a very reasonable valuation, and also holds roughly $6.1 billion of cash on its balance sheet, which equates to roughly a third of its total assets. If you believe like us that crypto is here for the long haul, then Coinbase might be a useful long-term buy at these levels, but expect a bumpy ride. While you're here, go ahead and click one of the videos on your screen and learn more about your current world of investing. See you there.